Good afternoon, everyone. Morning for some, evening for others all over the world. Welcome to today's live trade session for 2/1, February 1st, this first trading day of February. You'll notice, by the way, February 1st, that stocks are up. Guess what day it is? The first calendar day of the month. Some of you have been following me for a while. You know, the first calendar day of the month is the most bullish day for stocks. As a matter of fact, almost 80% of the entire gain over the last 30 years can be attributed to the first day of the month. So we see that happening again. Just so happens that February is not the best for that, but when you after a pretty big down move on Friday and most of last week for that matter, we have seen that come to fruition. I just wanted to throw that out there. The photo, I know some of you are going to ask, the photo, this is probably not one of my smarter moments in my photography hobby, but I was actually driving at the time that I took this photo. I mounted the camera on my dash. I couldn't find a place to stop and set up, and the lightning was just crashing down, and I could not pass it up. So that's what the squiggly lines are in there, is that you see moving lights, and then got a pretty good shot there while driving. So I wouldn't recommend doing that. I was never in danger. It's just a matter of pressing a button on the dash as I'm driving and being awed by the incredible lightning show that was in front of me. So, all right, so that is that. I am going to just kind of warn you that I have not been feeling well here, and if it gets to the point where I may need to end this call early, breaking out, I don't want to get into why, but I try to never miss these. And so I didn't want to postpone this one because I had to postpone one this morning for a completely different reason. But nonetheless, I don't know if it's, yeah, we'll just leave it at that. I'm going to try and get through it. And if I don't feel I can in an adequately, I should say, then I may end this early. So, all right. So welcome to today's call. One quick announcement, the one that I've been making for the last month. This is being postponed just a bit, mainly because I'm behind. They're waiting on me for some stuff. But we are going to be offering Trade Partner for stock for sale to anyone who wants to buy it. It's a unique situation, and it's not an OTC. It's not over the counter. It's not on a market. But anyone who wants to privately buy shares of Trade Partner, you can do so, and you don't have to buy a lot. You can buy $100 if you want. You can say you're a part owner in Trade Partner. Now, I'm not going to make any claims. Okay, I'm not going to throw these numbers out there because it is totally different, completely different, kind of. But I don't know if any of you had heard about the Tasty Trade deal that was made. $1 billion. IG bought them out for $1 billion. That's insane. That's ridiculous. So I'm not going to say that we're going to do that because the completely different business model, but it's out there, right? So who knows? So anyway, that's coming. More information will be there on that once we actually make it available. All right, having said that, for those that are new on the call, I do want to welcome you. I also do want to warn you, especially today, I'm not going to be explaining everything about these trades on the call. And you should not expect to walk away from this call understanding everything that we're doing. It's not going to happen. It's impossible to do that. You're not going to find this stuff anywhere else in the entire industry. So this is going to be brand new to you. And you just have to give it some time. These calls are meant to be cumulative so that you build on so that they build on each other as you go through each one of them. You continue to learn. We've got some great performances by clients who follow the instructions, including Mike M from last time said that he took 9 crazy calendar trades, which we'll talk a little bit about crazy calendar trades today, but he took 9 crazy calendar trades during the month of January. 8 of them were profitable. Average profit per trade was $55. And he took 3 option insanity, 5 1 option insanity trades, and all 3 were profitable for an average profit of $286. So that's just one, and several of you have piped in and said talked about some of the success that you've had with these trades. So these are fantastic trades, but you have to give it some time. You have to start small. You have to make sure that you follow instructions and that you are not reckless with how you do it. And you start small because you have the potential to grow, your account, and you can grow your account very quickly once you start gaining profits in your account. And the compounding is really where the wealth is built, right? So if you're going to start with a small account, you start with one, and eventually you start making some money through this approach or through some of these strategies, you can begin to compound. And on the ones that you can compound faster, you can actually grow your account by about $30,000 in just 6 months if you can average $100 a week. Now, if you can't average $100 a week, that's fine. If you can average just $20 a week, you're talking about growing your account significantly more faster than the fastest growth stock over the last 5 to 7 years, which was Netflix. Of course, that very well may be outdone by GameStop in a matter of 9 months, but it is what it is. Nonetheless, this is the more sure way. That I can assure you. This is the more sure way of building wealth outside of getting in on one of these weird short squeeze plays. So if you can get to the point though where you're averaging $100 a week, you're talking about growing your account to over 4 million, and that blows away everything, every single piece of stock trade that you can possibly imagine over the course of a 5-year period. This is the way to build wealth. So do what it takes to learn it. Do what it takes to learn it. All right, having said that, let's begin where we normally begin, which is just a quick run through of the 5-to-1 option insanity trades that I've got going. I only have one open right now, and I'm actually going to be looking at opening another one possibly during this call. So we'll take a look at what's available and go from there. But you recall, I had one on at a huge credit, $7.95. And ended up taking a $500 profit on that one fairly quickly. Well, not fairly quickly. Actually, it was about a week. It took about a week, and I did that one a little closer to the money. And I did that one a little closer to the money because I felt the upside was limited, and there's a huge amount of time value. And so got rid of that one fairly quickly. This one, however, I hung on to, and right now. So this is a long 382 and short 5 392s. And I held on to this one, even though it's got a $300 gain. Why would I hold on to this one? Why not just take the money and run type deal? Well, the reason is because basically with the $285 credit, I know I'm going to make the $285 credit if the market stays below 382, right? And so if the market moves up, and this is a 212, 216, so it's got a couple of weeks on it, not quite a couple of weeks, less than 2 weeks. And we have the potential as this market moves up, if it continues to move up, then it's going to move up into my profit zone. And I have the ability to, with fairly, actually not fairly, really, really good risk reward ratio here for holding on to this thing, because the probability is that as it moves through this profit bubble, I'm going to have a much bigger profit potential than $285. And so that's why, and there's no reason to walk away from what is almost not certain more money, but almost certain more money before it ever even comes close to risking. So I've got the profit, and I'm way down here And with this much time left and the way that time value drops over the last 2 weeks, any movement into this area should provide a bigger profit than the minimum gain. So we'll keep an eye on it. Obviously, I'll update this again on Thursday. Then we're also into this option insanity trade. This is a 1-2-1 option insanity that I talked about a couple of weeks ago. And this is one where you can, where you don't have to worry about the risk. On this one, you have to worry about the risk because if the market does absolutely skyrocket, if you're in one of these, let's say a month out, which is what I'm going to be looking at today, is one that's a month out. If you're looking at these with a month out, and the market, say they do the stimulus package finally. We can see the market jump, and if the market jumps and goes, past this area, you may not see an open position profit if it's too early in the trade. And so then you've got to worry about that. Do you hold? Do you swap? Do you, whatever you do? I can tell you that whatever trade you put on, you have to be willing to accept the risk of that trade. Period. End of story. That's what will give you the leverage in your psyche, if you will, in your mind, to make the right decision on whether to hold, whether to roll. And instead of making a decision based on your fear of losing, you make a decision based on what's financially sound, what's statistically probable. That's the benefit that you get when I tell you you have to accept the risk. I am speaking, obviously, most of you, I hope, are not over trading your accounts, and one loss is not going to wipe you out. That would be that's trading 101. Don't ever put yourself in that position, right? Or any week or any month for that matter. Don't ever put yourself in that position. Nonetheless, a large loss here, if mentally you haven't accepted that risk, then you're going to find yourself making an emotional decision. So that's, with this, that's going to be more of a possible situation than this is. Although I did get a couple of messages the other day on this, where this particular trade was actually at a loss, and the risk graph on the trade was not showing what I'm showing you here. And the reason is because, in fact, the risk graph was showing this dipping below. And the reason that is the case is because those volatility numbers are based on the market crashing down. And again, if the market moves back up into this area, remember, we're way down here. If the market moves back up into this area, that volatility is going to come crashing out of these, and you're going to see this materialize. It may not be $250 at the peak, but the risk is only here at 380 and then 390, or they're really close to that, and it's not going to be that big. Because the volatility, if the market's trading at 380, the volatility is not going to be so spectacular that you're going to suffer a loss. So if we tank down to 365 and then blast back up to 380, and that's where we're sitting at on 212, then yeah, we're going to see a loss on this trade. But it's not unlimited. It's probably going to be $100 or less, and you don't have to worry about it hardly at all as far as suffering a big loss. I mean, this would be a really bizarre situation for the market to crash down, come back up, have the volatility maintain in the option on Monday, and take a loss here, right? That'd be an oddball situation. You don't want to dictate everything you do based on oddball situations. You have to account for it, but that's not what dictates how you trade. That's the proper mentality behind all of this. And the further up this, right? So if the market moves up, this is even a smaller risk because we have a much higher probability that if the market is trading at 390, the volatility of that actually probably come out even more than what I show here. And so this is one of those scenarios where you can place on an option insanity trade, and really you're not risking very much at all, and you have a very high probability of of pulling at least something out of the market. Again, the most risk is the market crashing and then coming back up into closer to this 380, where there will insert some time value in that. So that's what you have to look for. That's what I'm doing here is I'm trying to convey an understanding of this to you, so that you again make decisions based on confidence of knowing what to expect in all types of market circumstances and conditions. So you don't have to worry about this big old profit zone actually dipping below zero at all on in this current situation. You do, and I would take this into consideration, but if on let's say Thursday or Friday of expiration, if there's some sort of big announcement coming out on Monday, then that's another story. And so you know that I would at least just check on the trades. But again, the amount that this can go against you if we're trading it at 3 is very, very little. So the 385s would be out of the money, right? And whatever value is left on the 385s is basically what you would be looking at on this. And this was at a small credit, I believe. Okay. So these are still available, actually. In fact, this trade is still available because the market came down, and I believe this trade is right now trading at I want to say like a 4 or 5 cent credit. Right now. So this trade right now is still available. If anyone wants to dip their hand into the water a bit, so to speak, and go with a lower risk option sanity trade that has a bigger bubble. And I mentioned that there are ways to create the credit and put the risk to the upside, which I prefer, quite frankly, is to create the credit and put the risk to the upside. We may look at a couple of those today. We'll see if we have time. That's moving on to the crazy calendars. As the market has moved down, we've gone a little, or as the market was moving higher, I should say, we went a little bit more on the bearish neutral side of this, and placed this trade at a credit of 37. Of course, this ends this Friday, and we are well below the market on this thing. This is a 388, 392 spread with 390 calendars. Probability of the market going up to 390 this week is very, very small. This is obviously is at an open position profit right now at about 37 cents, right? So because we're trading way down here on this trade. So we got a long way to go, but that's because the market, after we got into this trade, the market tanked, and you can make $37, say $37 a week if that's all you do. If you were to put one of these on where it's way out of the money every week, and $37 is all you do, you can grow that significantly over time. And one of these, some of these will move into the profit zone and give you a bigger profit potential. But you can't complain about $37 when you're talking about the compounding. $37 compounds into about 700,000 after 5 years, and that's with this strategy, actually, and that's pretty conservative. So this is nothing to sneeze at, and if this is all you do, you can be satisfied with it and compound it, and just put one of these on consistently, week in, week out. So that one is obviously out of the money. I also placed on this one, let's see, it was a week ago today. And again, this is a 212, 216. Oh, this is the one. 390, 393, 3. Nope, this is the different one. 394. That's right. I did this one more bearish neutral, bigger risk to the upside, but at an 84-cent credit. And that one, gosh, I need to see if I can find that one to see where we're at. I think I know where that one's at. So, which, yes, I have these in many accounts, and it's, I say many. It's not that many, but it's still enough to cause a bit of confusion. Let me see. I'm almost for certain I know where that one is at. So hang on 1 second. And spread. So let's see, 84, 84, 84. I'm looking for in my spread pattern. Nope, I guess I don't have it in that one. All right, well, that one obviously is doing just fine right now as well. Again, way out of the money. In fact, you can probably get out of the 388, 394 for almost nothing. And if the market continues to move up, you might be able to put it back on. So you take your full credit off of that one. And the 390s are going to be almost worthless right now. So if the market moves up into that area, then that's actually a positive thing. Actually, I think these are worth about 10 cents right now. We'll take we'll take a look at this one specifically here in a second. And then on, let's see, what day was this? This was, where in the world? All right, I keep saying that I'm going to not have 50 trade partner windows open during these calls, but I never, I'm never quite successful at that. And I had it open to where we were filled on another one of these trades. Let's see here. I think what I need is like one of those, you ever see on TV one of those, some of those people that work as organizers for your closet or your garage or whatever the case is. I need one of those for my computer screens to come in and figure out how to better organize all these windows so that I don't lose them all the time. That is really annoying. Really, 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 really annoying. But I think I've got the spreads here. Yep, here they are. All right, so we're going to take a look at some of these. On Thursday, I believe it was this one and this one that I was filled on. Is that, yep, 129. Yes. Okay, so here is the, and I legged into this, right? So here is the credit spread, 383, 387. That's the credit spread. And then the calendars were at 386, and I got filled on those at 27 cents. I also did several variations of this. I think I did a 282, or excuse me, a 382, 386 with the calendars at 384. I was also filled on that one. Oh, there it is. There's the 387, 383, 387, 385s, and I did all this one with one order at a credit of 12, and that one was filled later on Thursday. Actually, was that Friday? That looks like a Friday fill. So these are basically the same trade, only slightly different calendars. So the 385s are the calendars, and here the 386s go with the 383, 387. So these are all credit. This is a credit spread that I'm using to pay for the calendars. And the reason I did a credit spread, actually on this one, it's not a credit spread. This is a diagonal spread. That's why I did that one differently. This one is the credit spread, and then this one is the diagonal spread. So Total credit on this one is 12 with 3 calendars, 12 cents with 3 calendars. Total credit on the one where I actually did the diagonal spread, I did that from a credit of 1, and we're trading at about 133 right now. And then the calendars for 27 cents a piece. So basically, we have almost a 20-cent credit on that trade. And on this one, you can actually get into this one right now for a better credit. Because we're starting to move, because today we moved higher, right? This one is 219, 222. So 219, 222 is the one that is separated here. And then the one that I put the order on together was 212 and 216. All right, so we've got a representation of a couple of different ways of doing these crazy calendars. On any of these, I didn't do the big number of calendars. And I didn't do that because it's way up here. The calendars are at 385, for example, and this one has less than 2 weeks. And so if we move up towards 385, that's something that is definitely going to provide some sort of profit potential, but it's not going to be this huge profit. And the reason I did that is, again, because I wanted to focus on making sure I had a credit on this trade. Okay, here's what it looks like. Basically, this is the 212 credit. This is one that I have filled on as well, 282, 382, 386 with the 384 calendars. And I'm in that one from a credit of 18 cents. And again, that's in about 2 weeks. So we've got this almost 20-cent credit on this one as well. And the market has a nice profit zone, and then that comes down quickly. But because of the way that this is structured, the risk on this trade is about 300, absolutely worst case scenario, $380. But the probability of realizing a $380 loss is very, very, very small, because the calendars would have to have no extrinsic value in them whatsoever while they're in the money, and they hold their value better when they're in the money than they do out of the money. And so if we can, if we can get to where we're breaking even on the calendar, on the calendars, then obviously that's going to drop the overall risk significantly on at these levels. So so there is the, obviously there is the chance that the market could move up and not allow us an opportunity to take any kind of decent profit and then move into the risk zone. That is a possibility, but the probabilities are pretty significantly in our favor. This is not like a super high probability trade right now because of how much the market is moving, but I think this one right now is sitting at about 83 to 84% probability. I would need to double check that, but and that's taking into account, by the way, the probability of getting out of this trade early if that opportunity is given to us as it's moving up here into this zone. If it waits to move up until later this week, maybe early next week, but we'll keep an eye on that and see as well. This one is a little bit lower than the ones that I just showed you here. So this one, the calendars are at 386, and that's the 219, 222. This one, the calendars are at 385. All right, so this one here, the calendars were at 384. So I'm spread out across this whole range basically, and I'm basically was saying, which ones I got filled on and pushing it up as far as I possibly could in order to get a credit. All right. All right. So those are everything that we've been doing. Obviously, everything that we had ending this week, we exited. The market tanked obviously last week, and so Everything that we had on last week that needed to be exited was profitable without exception, unless you didn't do a credit. And even then, you probably still were able to pull out at a profit because of the increased volatility in those longs. But it's been pretty easy. We're going to see if we don't see some pressure being built on some of these positions over the next couple of weeks, as we see what the market does and whether there's news events that come in and push the market up further. Not today's move higher, February 1st. I know people want to try and attribute it to other things, and that's fine. I don't care if they want to try and do that. But I've seen this happen way too much, where especially when the last trading day of the month closes down, you see a very high probability of the market moving up on the first calendar day. So we might see a little bit of follow through tomorrow. If that's the case, then we actually have a pretty decent probability of seeing the market pause at that point from a technical standpoint, which I don't use to dictate my trades, by the way. I just am aware of what's out there as far as those kind of market movement statistics are concerned. Been doing it too long to not be aware, I suppose. All right, now let's see what is available right now if we wanted to move forward with some of these trades. All right. Let me try and move this over. And I'm going to do a spread pattern. And 1 second here, I'm going to go ahead and move this over. All right, so I'm going to do a spread pattern here of a 5-to-1. Actually, I already did one, but I did it. Yep, actually I already did one. So let me pull that one over here. So the first thing we're going to look at is we're going to look at the 5-to-1 that expires on 2/12/216. And we're going to start with, well, let's just go to the one I have, which is the 382.392. Here it is, 382.392. I'm in at a credit of 285. We're now at a debit of 25 cents. It gives me more than a $300 profit, about a $310 profit on this trade. If we can move up into 382, 383, 384, we should see a pretty significant profit by the end of the week, if that's about where we're trading. If we're not, then I'm going to still hold on to it, because if it moves up there next week, that profit will be even bigger as it moves up in to that zone. And you can see here right now, we pretty much have the best one on the board just based on where the market is trading. Right, so the one that's before it, it's at a debit of 17. The one that we have is at a debit of 25. The next one is at a debit of 23. So right now we're just kind of in that sweet spot with where the market is. And this is really not that meaningful since I've decided to hold on to the trade and see if we can't see the market move up into that profit zone. Right now, what if you wanted to get into a trade for the next couple of weeks? Well, look where you have to go. Just to get a credit, you have to do a 379.389, which is not that bad. 379.389, that's the short. Your risk is going to be, around 391, 392-ish. You're not going to have to pay near as much for a margin hedge by going less than 2 weeks out. But if the market jumps, if you were to put this on, I'm sitting on a $300 profit on that trade, right? So if the market jumps, I'm going to be fine. But if the market jumps now, you might be sitting on an open position profit, or excuse me, an open position loss. Let's say if it jumps 1, 2, 3, 4, 5 points from where it is right now, we might be taking a look at about a $400 open position loss immediately. Now, again, this is going to change because as the market moves up, the volatility will come down. And so you'll actually see this come off pretty good. But on, obviously I would not put on a 425, even at a 425 credit, I would not put on a 374, 384 trade right now because we're already past 374. We're at 376, 377, somewhere around there. And we've got 2 weeks to go, and I do not want it to go above 384 on this one. All right, so wouldn't do this. Wouldn't do that. I like keeping these out of the money, especially if they're 5-1. And right now, you really can't go out of the money and bring in a credit. So that rules out that week for most traders. So let's take a look at the following week and see what we can do. Again, I already put this together. So we will generally, whoops. Let's see, 380, 390, 5-1. Let's go 375, 375, and 395, and 1. And generate the spreads. What in the world did I do wrong? Oh, there we go. All right, so this is the following week. So this is about 3 weeks out, not quite 3 weeks out. Obviously it expires on 2/19, but there'll be some serious time decay on these. So the what did we talk about? The 374, 384 was trading at a $400 credit. Well, the 375, 385 is trading at almost an $800 credit right now. There's quite a bit of time value on this one. I wouldn't do this one, even though I did one similar to this. I did it when the market was up around 385, right? So we still aren't far enough up for me to be bold enough, if you will, to do a large credit one because we're too close to that short strike. And on this one, there's 3 weeks to go. I would need to see the market move up a little bit more. Actually, I need to see the market move up between probably 382, 385 before I consider a bigger credit one on here. And I will, if that's what happens, by the way. All right, but if we were to keep going, you'll notice here, the 379, 389, we're not even to 379 just yet, and it's got a credit of $320. That's not bad, but you do have 3 weeks to get to the 389, but you have a $320 credit, so that gives you a jump start. If you want to go a smaller credit, you can go 383, 393. That's an incredible trade. Wouldn't mind doing that one at all. You have a pretty high probability of seeing about $100 profit in the next week, as long as we don't skyrocket in the next week. So that same one, 383, 389, or excuse me, 383, 393 is trading at a debit. The previous week is trading at a debit of 25. So what does that mean? It means that if I put this one on for a credit of 105, then in 1 week, it should be fairly similar to this one at a debit of 25 cents. So I make about $125 if the market goes nowhere. That's the key, all right? But again, even higher probability, you want to just do $61. That's 385, 395. Your break-even level on this one is around 397. And that would be a pretty big move over the next 3 weeks, and it would need to be there, by the end of the week. And probably lots of opportunity to get out at a profit before then. But you can see here, you can still go out and bring in, here's the 390, 400, still bring in $35 for that thing. It's not a huge profit for a trade like this. If the market stays down, but if the market moves up, that one will look pretty good. All right, so there are some trades that are available the following week. If you don't want to go a full month, now let's take a look at the full month. And again, this is just the process. This is the same process I use for any strategy. I look at where the market is at, I compare the different weeks, and I decide what I want to do based on that. All right, so let's take a look at the 383, 393 1 week later. So this is 226.31. Okay, so this one has about 25 days, right? So almost 4 weeks on it. And of course, February is short, but this one is the 383, 393 is trading at a $350 credit. Again, what's this one trading at? 383, 393. 383.93 is trading at $1.03 credit. Right. So now if I do this one, and the market stays about the same, I have about a $250 time value on this one. Because if the market stays the same, I can expect that one to go down to about $1 credit. Probably a little better than $1 credit. Hang on for me 1 second. Oh, sorry for that interruption. Nonetheless, this one's pretty good, but how far can you go and get a pretty decent credit? Look, 380, you're looking at 386, 396 now, and you can still do a $200 credit. This is probably the one that I'm going to do, and I'm going to do it because I get to replace one that I got out of last week. I just wanted to wait until the market made at least a little bit of a bounce, which I thought would happen on the first calendar day, and it did. And so this is probably the one I'm going to end up doing at a $200 credit with, this is the one where I try and go for about $150 profit target, 150 to about a $200 profit target on these. And I'll, by the way, I will probably have to leg into this one. And I'll probably have to leg into this one because of the 5-to-1 rule. They've changed it to where you can only do three to 1 and in one order. And so I probably have to leg into that one. All right. All right. So let's switch to, move these out of the way. Let's switch to the 1-2-1s. Here are the 1-2-1s. And this is 212, 212, 216. So this is the exact one that I have right now. And I have it on for basically a credit of nothing. So debit of 0, credit of 0. And look, it's trading supposedly at a credit of 14 cents. So I actually am losing just a little bit, 13 cents. I'm actually losing just a little bit of money on this one. And I'm not worried at all because if we continue to move up, then, or am I in, what? Maybe that's not the one I'm in. Let me double check that. I'm in several of them, but the official one that we've been talking about is the 385, the 380, 390, 385 is the one I'm in on this one. So that one is actually here. So that one's at a debit of 31 cents, 380, 390, 385. I'm in at a credit of 0, so I'm actually making $31 on that one. So showing you the wrong one. Nonetheless, that one is not available right now. And I wouldn't put any of these on at a debit. And so what we'll do is we will take a look at the following weeks and see if there's any that are available. So I'm going to reset those. And I'm going to go 219, maybe. 219, 219, and 222. And I'm going to go ahead and generate those. All right. See if there's any that's out of the money. This one's slightly out of the money. And this is about as close as we can get, and at an almost a 0-0 situation. So that one is buy 377 and a 387 and sell 2 of the 382s. Small debit. I'd try and get that one maybe at 0. And that one looks really good because the profit peak is at the short strike, which would be at 382. The risk obviously would be at 377, 387, but that risk would be very small. And so that's one that I would definitely consider. If we go one more week out, and we'll see if any of these are credits, you can place these out as far out as they will allow you. So we'll go 220, 226, 226, and 31, and generate. And we'll see where they go here. All right, so you can see the credits are available. These are very slow time-wise. You have to wait for the market to get into the profit zone. That's the only negative about these, is you can put on a small credit, but then you're going to hold on to it and hope that the market goes into that profit zone or stays in the profit zone over a period of time. So the first one it looks like I can get a credit on is the 378, 388 with the 383. So that would be my profit peak at 383. And that one would be a good one. And I hate to say it, but I have no clue what's going on. I'm breaking out in a cold sweat right now. And I really think I need to lay down for a second. If you guys don't mind, I'm going to go ahead and end this call. And we'll go a little extra long on Thursday to make up for my short ending here. But it's pretty straightforward what we are looking at doing and what we're sitting on right now with the crazy calendar. So I'm not going to add anything. Whoops, I'm not going to add anything to my crazy calendars right now because I have a bunch of these on for February 12th and February 16th. So I think this will be a good place to stop it, and we will end it there for today. I appreciate y'all's understanding, and I will see you on Thursday.